Got Don and Cred both on the line. We're excited to be here with you. Thanks for joining us. Don, how you doing?
Good. I mean, how could you not with a chat like this?
Well, if you're sidelined and wanting to FOMO and don't know when or how, then you could feel that might not be as glamorous as you, Mr. Bottom Buyer.
Well, I mean, there's gonna be another chance. It's just gonna be high up, I'm guessing, but we'll see.
Okay, Cred, how's it going?
I think Don's turning into the main character very slowly, and there's some sort of mercy killing we have to perform at this point, because it's better we do it than the public, to be honest. But yeah, good, thank you.
I like that. Don as the main character is a good one.
I don't like it. I don't want to die.
Sorry, kiddo.
Should we go ahead and get some previous main character news out of the way and talk about how bankrupt entities are raising money now, and just so 3AC and CoinFlex founders are trying to raise $25 million. It's making the rounds on Twitter this morning. They don't even give it time really to settle. They're just out there. Like, here we are with GTX, like one letter out.
Literally one letter. Yeah, one letter away. Like,
and it's
unbelievable.
I mean, it's just so absurd, right? Like, imagine, have you guys seen the pitch deck or whatever it's called, where they're like, we ran up the firm from like a couple mil to a couple billion, and then we went bust. I'm like, what the fuck? Like, this is not how you advertise yourself, especially.
So let's do it again. Let's do it again.
I think it's both entities got wrecked, right? Because the CoinFlex guys got wrecked by Roger Ver and, you know, lending him infinite amounts of money and suing each other. So you've got like a bankrupt hedge fund and a wrecked exchange partnering up one letter away from FTX for you to go trade claims on those bankrupt companies and others. Like, what are we even doing, you know?
But they just went one letter up in the alphabet, right? Yeah. Like, fuck it, send it. It's absurd, completely absurd.
Yeah. There's like this battle, and I'm not a neuroscientist, but, you know, you've got like your lizard brain, and there's the survival side and there's the degenerate side. One's very conservative and one's very aggressive, and people sometimes confuse them. It's like a very aggressive side of your lizard brain is like, this is a good idea. I should invest in these guys. The conservative side is like, what's wrong with you? And you mistake them for each other sometimes.
Yeah, I mean, the saddest part is that I could see it work.
Oh, it's gonna work, yeah, for sure.
So, like, my brain is like, this is probably a good investment, but I definitely do not want to be involved in any of that.
Yeah,
it's like, I don't know. Sometimes I see stuff where I'm like, I'm sure this is gonna go up, but I still don't want to do anything with it, because I don't know, it just feels too dirty. And when you kind of just, in crypto, when you kind of just support these actors or these kind of moves, then you're not really making the space a better one, even if you think you're gonna make some money along the way. So I don't know. I'm not gonna do anything with it. Not that they would have me, probably, given what I've been posting on Twitter, but yeah.
I'm sure they'll have their fans out there still.
Yeah.
I find the comments of those who are closest to them the most interesting. So, like, Arthur 0x was basically saying something like, it's amazing how you can have just no shame whatsoever. That was his comment this morning. Some people are truly able to have no shame at all 1 hour ago. I'm sure no correlation.
I mean, they got served a bankruptcy notice officially via Twitter like 2 weeks ago, and now they're asking for 20 mil to start a business. It's a bit mental.
Yeah.
But also, it makes sense, a lot of the posturing that they took up after the fact, which is that the exchange was so bad and it was malicious and poorly handled and we got hunted, etc. If you bang on that narrative enough, then lo and behold, we also have a solution for you. You know, our own exchange. So a lot of that kind of,
where the first thing you can trade is claims of other bankrupt entities.
Yeah, can you trade the 3AC claims on there? Yeah. I wonder. You know, I doubt it, but it certainly makes sense.
Yeah. Anyway, Don, shall you update us on price action since the last time we spoke?
Yeah, I can run us through. It's actually the first time in a long time, I said this in the pre-show, that we actually have some move like we have a monthly move, we have a weekly move, we have a daily move. It's beautiful, absolutely beautiful. On the monthly time frame, we didn't really hit the 14K level that a lot of people were kind of hoping and waiting for. And we kind of ran into resistance now, this range low from this consolidation here on the left side. That's going to be interesting to me, how we're going to kind of trade around the monthly close. I want to see us close as far above as we can on this level here. I wouldn't want to close below it. That isn't like, it wouldn't be the end of the world, given the weekly and the daily would still look really, really good. But I would like to have the monthly on my side as well. And if we close above this resistance here, the breakdown level basically, then it becomes a really clear bullish setup, right? Let's say we close above it. I mean, you have the setup. I'm already in, so it's not for me, but like for people that are sidelined.
I liked your loss. Listen, if it goes below 3K, I'm going to cut my losses.
Yeah, I mean, but like this kind of trade makes sense to me if we close above the monthly. It's decent risk reward. I think it's a good chance that it does move if we close above, so you're not going to be stuck in the trade for too long. It's a conservative trade. I really don't mind it on the high time frames. But yeah, we'll see how the monthly closes. That's gonna be a thing in 2 weeks. But the more interesting chart is the weekly time frame, and that looks really, really good to me. We bounced from the 16K level. I kind of kept talking about it. It didn't really seem too important given we broke the 20K level, but that was just the support below it, which usually, like when you have like a really good level and something bad happens, I'm usually interested in the level below it. And this was the case. Like we hit 16K, we bounced quite strongly. And the best part about this is that we came back into the 20K range, right? So we had this 20K range here where we bounced a couple times, ultimately broke down because of the FTX scandal, the FTX insolvency, whatever you want to call it. But now we're back there, right? And we're trading back above the support levels that we broke back then. And that just starts looking really, really good, right? This looks a little bit like, I mean, you could kind of see like an inverse head and shoulders showing up here. I wouldn't be surprised, like if we just consolidate a little bit, walking upwards. So the weekly looks really, really good to me, even if we come back to like 19.3, 19.4, so this support level here. That looks really, really good. And the first resistance on the weekly would be 24K. The next one, 32K. So that's kind of what I'm eyeing. I want to see how we trade around 24K. Because I don't think, like when you have a move like this, it's very rare that you just have like a move up and then you start bleeding out. The only real example of that I can think of was the XC pump. I don't know if you guys remember it, but that was basically this scandal here.
Cred, did you just lose Don, or was that me?
I think that was you. I'm loud and clear on the propaganda.
Okay. So you guys are still hearing me, right?
I am.
Okay, cool.
I don't know, presumably the stream is
just cut out. Go ahead.
Okay, cool. So the XC pump, right? That's the only kind of real example that I can think of where we had like a massive move to the upside that immediately got faded. But there's a big difference there, right? In the XC pump, and the difference here between what we've done and what this pump was basically
is that this time I'm long. Sorry.
I was actually long back then too. But the difference is that back then we ran into resistance and got rejected hard. This time around, what we've been doing, right, is we ran into resistance, completely smashed it, and what we've been doing on the daily time frame is honestly completely insane to me. I thought that we would have a bigger retrace of this, but what we've been having is very constructive consolidation. We haven't even, this is 1 day, right? So you have 1 day price action here. People are like, oh, this feels so heavy, whatever. We haven't even retraced the last day of this rally, right? So as crazy as it sounds, like I could just see this go sideways without much of a pullback, and then just go for another one. It's very rare that you have like pumps like this and then they fade. Like I said before, usually you have a pump like that, you go sideways, and then you pump again, and then you either fade it or you just go completely crazy. But I think there's a good chance that we're going to break 21.6, like the highs that we set, and we're going to go towards a daily range high, which is 22.5, and then we'll see if we can make it to weekly or not. But right now, it looks pretty good. 2 daily red candles that are tiny in comparison to the green ones is some of the best price action we could hope for after a pump like this. Just puts in a little bit of a base that we can push off again. So like I'm still pretty happy with everything. And a setup that I talk about a lot, and I mean I've said it on this stream, I said it on the streams that I do and with Cred as well. It's just basically when you have a range like this and you fail it, you come back down, right? And then you start going sideways and come back into the range. It's one of the more bullish things that you can get. That's exactly what we have here. And usually I expect at least the range high, if not just a straight up breakout. And I mean, I think if you want to be very, very conservative, you could aim for 24. It's also weekly level, like anything in between here. That's the very conservative target for me. Everything above, I mean, I think 32K is the aggressive target, and then anything in between there, I think makes sense. That's kind of how I'm looking at it anyway. But yeah, that's kind of how I'm looking at the chart.
Can y'all hear me?
Yes.
Okay. My headphones aren't working. I don't know why, but my speakers are working, so I can hear you and we're fine.
Nice.
Love it.
So I was like bull propagandaing and you weren't even listening. Sad.
No, I heard it. I heard it. I was just hearing it through like speakers on my desk. So I was trying to figure out what the heck is going on. But anyway, I liked it. This potential 3 weeks of sideways reminds me of what could happen. Similar to what happened when we broke out of that 4K range in 2018, where after the one giant candle, it was like 3 weeks of just desperate pain sideways, everybody expecting a retrace, and then you got multiple weeks of continuation when that didn't occur. Yeah, Cred, how do you feel about things?
Yeah, you know, for little old me, this is all too much, all too quickly. So I think the yearly close will sort of allow me to make clearer decisions as far as the market goes. Memes aside, I think the 20K reclaim was like a pretty big deal, both technically, narratively, you know, in terms of just optics and the whole thing. And also sort of with that comes the reclaim or trading above the FTX breakdown. So any narratives suggesting, at least in the short to medium term, that like, oh, crypto's dead and, you know, FTX killed it and it's never going to go back up and contagion, etc. That sort of, you know, bearish comfort zone has certainly been threatened. And I think it also just like purely from a trading point of view gives you a fairly good invalidation that anything back below sort of 19.5, 20K, whatever you want to, however you want to delineate that former range low, that starts to look pretty bad. But above it, you know, the momentum is fast and everything's displaced a lot. And so, you know, it's probably not going to give you textbook type of pullback, whatever price action. But I think bigger picture, given this is a weekly show, generally speaking, so on and so forth, you know, 20K is a good line in the sand. As long as we're above it, that's fairly constructive. And yeah, you do start to run in sort of, as Don said, daily range highs and all sorts of other structure. But if we're talking more zoomed out view, I think it's, you know, structurally quite important and quite different to what we'd been dealing with prior, you know. So that's sort of where my focus is. I'd be quite surprised if we got like a very clean, orderly pullback to like 19.5, 20K, especially if it happens soon. If anything, that would make me quite suspicious that, you know, basically within a week of the massive momentum breakout, it just starts retracing and retesting. I kind of don't want to see that if the market's going to be strong. The most acceptable thing I can think of is some sort of really fast, almost flash crashy type of move, like a wipeout candle closer to that range low. And that needs to be bought up very, very aggressively. But I think these types of moves are their best when they don't retrace a whole lot, certainly not all the way to, you know, where the reclaim took place. And so I think if you're optimistic, you kind of want to see at most sideways, maybe sort of shallow dips and, you know, something on the daily time frame and so on and so forth, but a kind of, you know, baby pip style, oh, look, it broke Don's green box and it's going to go straight back there and then it's going to bounce. I'd actually find that pretty, I wouldn't want to see that, to be honest. Bigger picture wise, I mean, yeah, I think kind of a level to level approach makes sense. I can screen share very quickly to kind of add some color to that. So presumably you can see my screen now, right?
Mm-hmm.
So we were dealing, and I think I've done this before on this show, with essentially two ranges. The one we were trading in was 16 to 17.6. And we spoke at length on several shows how these double fake outs aren't very frequent. So when you do get a close back above where the fake out took place, that's usually a good signal. It was on this occasion, although the magnitude's probably surprised just about everyone. But that's that range breakout. And then the question is, where did we end up now? I think in the former range that also probably featured on the show at some point, which is this 19K to 22, 23K consolidation. And we're currently we're sort of fighting for the midpoint of that structure. So if you're bullish, or if you're looking for long setups, again, I think purely from a technical trading point of view, if you get some sort of range low retest, you almost have to buy it because the proximity to invalidation is so close. So, you know, when your invalidation is close, you can sort of really tighten up your risk, better risk reward, more sizing, all that good stuff. So I think you know, that's certainly an area where I'd want to do business, although I'd be surprised if this just dumped straight back there sort of in the coming week or so. I think if you're looking for bullish continuation, you kind of missed out on this whole thing. You're thinking, fucking hell, it's going to go to 50K Don's first trouble area without me. I think you're going to be forced, which is somewhat uncomfortable, but that's what these moves sort of create, uncomfortable scenarios. You're going to have to, in one way or another, do business at the range midpoint, following the range low reclaim and looking towards the top of the range. And so that might involve simply zooming in on the daily time frame and looking for daily time frame signals. So, for example, if we have like an inside day and then the market spikes the inside day low and closes back above the range midpoint, or if you go on the intraday time frames, like a failed break within this consolidation that gets reclaimed, something in here, I think is your better bet for continuation. And sort of conservatively, I think we've already come quite close, but I'd be surprised if we don't see this kind of double top level tagged or spiked or something at that price level. It'd be quite odd if we got like a big move, for example, even to the downside from here without eventually spiking these boys. But if you take it purely from a range trading point of view, what we've had is a range low reclaim and the market's at the range midpoint. The fact that we've reclaimed the range low generally suggests the range high is in play. The question is, how do we get there? And my answer to that is, I unfortunately on this occasion having to trade one way or another at the range midpoint, which I don't generally like to do. So where it comes from, don't diddle in the middle, because the best moves are usually within a consolidation formed at the extremes. But on this occasion, you simply might have to. And so whether that's something on the daily time frame, if this consolidation persists, intraday, some sort of failed breakdown, whatever, it kind of needs to happen around the 20.7, 20.6, 20.5 handle in order, that's kind of your route to get to the range high. Somewhere in here to put it, in box terms. And then when it gets to range high, that's, again, from a level point of view, that's your kind of de-risk / resistance, take profit, whatever type of thing. And then you make an independent assessment if the market gets there as to whether that's a real breakout, it's going to continue higher towards the highs, or whether, it's going to be range bound again, but instead of trading between 16 and 17.6, it's going to spend a bit more time moving sideways between 19 and whatever, 22.6. Those are all determinations to be made in the future. I just think in the short term, if you somehow get 19K, at least for my system, I have to trade it. And, fine, that's cool. Although the chart would start to look pretty dire. If this momentum continuation is going to persist, somewhere here, some form of positive price action in this consolidation. Really short-term trouble area is the double top we've built up so far. After that, sort of range high, which also lines up with this swing high there. And that was kind of the point of my not cryptic tweet by any means. The one that you have to focus on where price is now versus where it came from. I think if you spend too much time focusing on this, you're going to kind of get, I don't think it's entirely relevant, at least in the near future. I think, you have to just come to terms with the fact that we're now trading in a different range and come up with a plan for where the market is now, not where it was, a week
ago. Don't diddle in the middle is such a folksy phrase. I absolutely love it when you use it. It's one of my favorite. It is.
You might just have to on this occasion, Ledger,
Yeah. Well, not I.
Yeah.
I have my paltry bags. that I'm still holding. My only thing I will add is as requisite to show the 200 weekly moving average, which is also at that range high. So I love the confluence there. That's to me a nice place for that target, where both of y'all talked about kind of the 24.5 range as a next hesitancy zone, and looks an awful lot like a magnet to me if this move is going to have legs, which I like to see these recovery moves to be multi-week also, just from a amount of time it spends doing the thing. So it'd be nice, even if it goes sideways for a week or two, to get another thrust up there into 24K. I have much less confidence from 24 to 35 or whatever it was Don had for his target. I think that could take quite a long time and we could churn around for a bit. But normalizing the mid 20s again, making that feel like a price Bitcoin's allowed to be at instead of 16K would be really nice. So for this overall move, I'd like to see mid 20Ks, 24, 25. Something very noticeable that I'm curious how y'all are considering is the Bitcoin level dominance. So alts were not going step by step with Bitcoin. Seemed healthy to me, but what say you?
Yeah, I think it's quite good. I actually I was pretty sure that was gonna happen if we're gonna have a move like this. And the move was a little bit, in my opinion anyway, it was a little bit telegraphed because we started doing a parabola basically into resistance and into a resistance that we had tested a couple times. And whenever you have these big moves on Bitcoin, like I'm not talking about something like this, but these big, violent kind of
3 impulse days in a row.
Yeah, these kind of moves, you almost always get altcoin weakness, and that's what we got. Besides like a few names, I had a bunch of people go at me on Twitter being like, "Oh, you're such an idiot! You said altcoins were gonna be weak, and now like Solana is up like whatever." And I'm always confused for some reason. Like I don't know, like people on Twitter just kind of manage to startle me every time. But Bitcoin dominance been going up massively, right, during this. And it's still like, even on the downside now, like even in this consolidation, most altcoins are actually suffering, which I think is a good thing. People are basically rotating from their altcoins into Bitcoin because there's nothing worse than realizing, hey, Bitcoin might actually have like a big rally and I don't have any of it.
The pump is on, but not on my coin.
Yeah, a lot of people, especially the ones that have been around for a longer time, know this feeling, right? Like if you've been around in 2017 or even earlier, when Bitcoin goes crazy, altcoins sometimes, even we've had times where Bitcoin went up like 50% and altcoins went down 5% against USD, right? As in like they went down 50% against Bitcoin plus a little bit more. We've seen that before, so people are afraid of it and they rotate back into Bitcoin, and that leads to weakness on the altcoin pairs. And it's a good thing because that kind of leads to more Bitcoin strength, which we need for another leg. And then you see, usually, hopefully, you see some altcoin capitulation, where if you've caught the Bitcoin move, you can just rotate back into the altcoins because they will catch up, in my opinion. I think you're going to see an outsized altcoin move again at the end of this rally. Let's say we have another move towards like 24 to 26. Somewhere around that top, I think the altcoins will pop off because that's going to be enough to get like some of the retail participants back involved. And you just need like 5 or 6 altcoins to go massive for them to start trading altcoins again, right? And we also have a lot of people sitting in stables that would be enticed to kind of get back into it. So that's kind of what I would like to see. Another Bitcoin move that takes altcoins against Bitcoin even lower. And then a rotation back into the altcoins where Bitcoin tops, like Bitcoin maybe goes sideways for a little bit. And you have like a bunch of altcoin action, and then you have the first major pullback. And this is how, like in my experience anyway, it usually goes. You have a major pullback in which the altcoins lose massively, and you want to buy that pullback on the altcoins, not on Bitcoin, because then you get something like this, you get a lower high, you start chopping, and the altcoins go crazy. That's usually how it goes. That's what I would like to see for this one as well, because one, it's the easiest way to make money out of this thing. And altcoins, I mean, it's just a better place to make large multiples, obviously riskier. But when you get like a little bit of a liquidity injection, it's easier to trade them, I think. So this is something that I would like to see. And the current conditions with altcoins just kind of taking a hit, I think is a good thing. I would be worried if if Dogecoin was up 500% again, I'd be like, okay, this is a problem. But I don't really think a lot of people care about this yet. Most people, I think, are still either in disbelief. They're like, okay, it's still going to 12K, which I find funny, right? So we're trading at 15K and 12K is the popular target. And 12K is still the target, which seems kind of shitty, right? Like imagine this, you have basically, you're targeting 12K, which is just a tiny bit below 15, right? I mean, obviously it's like 20%. And from 15K all the way up to where we are now, it's been a 35% move, right? So like if you've been waiting for 12K, been greedy for it, well, it's kind of shitty for you because this is outsized. And I mean, I mean, it's just like the greed is to me unimaginable, right? People are sitting here and they're seeing prices below 20K, significantly below 20K, and they're like, okay, I want to see like 10K, 9K, 8K before I get involved. And if you don't want to own crypto, I mean, that's fair, right? As in you just buy it because it's super, super cheap. But at some point, if your targets are that low, I think it's just a little bit delusional. We might still go there eventually, but it's rarely in a straight line. And I think bears have been getting bailed out on the way down by the macro headwind that we all have been experiencing. And I think this might be a little bit of punishment for basically the free ride down for the bears, right? So we had a lot of people get very, very cocky on the bearish side of things and kind of feeling invincible because there was no fake out, no kind of like obvious bear market rally that fucked people over. It was just straight down, which kind of gets bears fat and lazy, not expecting anything of this sort. And now we're getting it. And I think one push isn't enough. I want to see another one. And I think that's going to be the death blow to many that are kind of just trying to greedily short this thing. And then you can, if you're bearish and you think this is still just a bear market rally, if you want to be shorting this at 24, 25, 26, I think that's more than reasonable. You can even target like the lows again, 16, 15, 14K. I think that's like a reasonable trade. But what I've been seeing from bears is just like, okay, it's not been going above 17K, so it's fucked. And then it breaks 17K, and then it's like, okay, but it's not going to break 19K. It breaks 19K, and then they're like, okay, yeah, but it's 12K still incoming. And that's just not how you should be trading, in my opinion. But everyone can do whatever they want. So, yeah. And it's fuel, right? So I'm not complaining.
Based on the question from Starkey in the chat, is this financial advice? The answer is no. This is educational and entertainment content only, and it shall not be construed as investment advice by any of the participants or the host of the show. Thanks for watching. I like everything that you said. I think that the alts that we have seen move, there's been some floating up, but there's also been some down days in USD, even when Bitcoin is up 4 or 5%, which is really positive. The ETH correlation broke down a little bit at one point, and then there's been some interesting moves. Solana's another one that you brought up, and even though it slowed down there relative to Bitcoin, while Bitcoin was having the thrust of its major move, on the whole, Solana's had an unbelievable recovery from $8 to really back to the range, the bottom end of the range that we had discussed for a while, $25, almost $25. So a 3x for Solana to get back into that range. Now it's battling its fast moving averages, at least on the weekly time frame, which I love this type of moving average for assigning the health of the market. For instance, even though it's 3x above its lows, like if this cleared this, you could say, okay, well, could Solana get to 35, 40, 45, even $50 to basically walk through that prior range again? And I would say, yes, it could, given the right circumstances. And it's super interesting to see this when, I mean, everybody got forced out of this coin. Like every bull, like really got forced out. And I was talking with Cred, like, when is it going to $5? You know, I wanted this level. It got to 8. I didn't buy it. And so I'm exactly the person you're talking about on Bitcoin, right? Like greedy for 12 when it's at 15. And I was like, it's at $8. It's probably a good buy. Cred even sent me the trade that he was looking at. And I was like, yeah. But what if it goes to 5? Like, I don't want to be down 40% on freaking Solana. So, yeah, there's been some independent movers like that have been, from a multiples perspective, pretty significant. What Cred, are you looking at any of the correlations? What are you kind of thinking about in terms of how you're approaching this market beyond Bitcoin?
So larger decouplings are a very tall order, and I don't necessarily think we're there yet, but short to medium term momentum can certainly put a dent in it, so to speak. And as we've discussed, macro has been fairly generous as far as facilitating this rally, because the S&P's been up, dollar's been pukey, and a lot of this is sort of just crypto flows, bunch of shorts blowing up, and so on and so forth. So that's good. We certainly had benefited from that decoupling type of window. I think my focus is probably about like 80-20 in terms of crypto price action, and then like short term macro levels and so on and so forth, just because I think that there's still enough kind of momentum, and the move is big enough to warrant paying attention to somewhat independently of macro. And that's sort of where the 80-20 type of allocation, if you will, comes from. I don't think there's anything immediately too scary as far as equity indices go. So, I mean, on the S&P, the monthly sport at 3,700 is fine. That's holding. It also closed the weekly above the big sort of 3,900 level fairly firmly. And so there are no immediate red flags as far as that goes. The first kind of trouble area that I probably may be worth paying attention to is around the sort of 40-50 type of handle, which is kind of the more recent range high. But there's some space still until that becomes relevant in one form or another. If you wanted to macro FUD yourself, you'd probably be looking at the dollar more than anything, because that reached the lower extremity of the monthly structure, which also aligns with its kind of swing high, all kind of lined up around the 102 level.
That's also 50% retrace exactly from that like low to high.
Oh, there you go. Yeah. Oh yeah, from the fib retrace. Yeah. And also just like 11% down, So as far as dollar structure goes, it's definitely at an extreme. So that's really, if you wanted to pay attention to macro headwinds, that'll probably be the only one. I just think I'd rather put my focus on this momentum resolution more so than dollar bouncing from support for the time being. And I think it's a rather straightforward question, which is basically, is this range midpoint type of area, or is some sort of consolidation at this range midpoint type of area enough to fuel a move to the logical target of this range low reclaim, which is the range high? That's kind of the, if you want to summarize my focus on this week, it's basically, is this range midpoint reclaim into continuation, or will we have to spend a bit more time here, failed breakdown, whatever? So what happens at the mid is kind of all I care about, at least for this week. Maybe next week or something else, got some headline stuff coming up, so on and so forth. It's a quiet-ish week as far as macro goes this week. But yeah, definitely this 19K to 22.6 range is kind of primary focus.
The bigger news that we were supposed to get last week was kind of a nothing burger, wasn't it?
Yeah, it was. Market shook it off essentially. So
CPI
that's also good.
Was right at predicted levels, and I don't even know what JPAL said because it didn't matter for the market, so I didn't pay attention.
The Economist got it right for once, which is clearly the most shocking event of all. So yeah, there's definitely. I mean, it's still worth paying attention to. But I think in the short term, you can afford to kind of look a bit more crypto only. And also, I've kind of noticed the shift in the news cycle, where up until very recently, maybe 3-4 weeks, bad news just nuked the market, and good news didn't exist or had no impact. As the market started coiling up into that 17.6 level, as Don talked about, bad news seemed to have an incrementally less of an impact. which was a good shift, and there was no good news still. We also had like a Nexo thing and a bunch more Genesis fighting, etc. The market didn't seem to care. All of that is very positive. And so I'm just wondering, kind of validation of that thesis, the kind of rotation in the news cycle would be if we get good news, how the market would actually react. My inclination is that at least in the short to medium term, the market's showing a willingness to soak up bad news, and that kind of leads me to the assumption that good news will start to have a positive impact. But that sort of remains to be seen. And also, I think we should mention ETH at some point, because that's also kind of a very interesting market structure levels.
Before we get to that, there's a couple other, since we touched on it, macro-y things that I want to point out, and then we'll do ETH and ETH BTC. I mentioned that 50% retrace that's here. The 618, and these are things that just legacy traders are definitely going to be watching, is these kind of swing retrace levels would be around 99.5 for the Dixie. Personally, I just think a move back somewhere below 100 slightly is definitely a reasonable place to stop. It's already been a significant retrace, and then you kind of go and try to figure out what from there. Do you do this bounce, or is it just full meltdown mode and crypto moons and risk assets moon, and you go back to the range lows of the past 10 years? Full Eiffel Tower of the Dixie, which would be astonishing. I'm not willing to say like it's impossible or anything, because the impossible has happened so frequently. But nevertheless, we're back in the green box of 5-7 years. 7-year green box. I feel like there's going to be some price action in here. So my most likely outcome is actually not this squiggle all the way down, but some kind of bounce and long consolidation in that 100 range to fill that level out, and then find out, is the dollar going to have really long-term, decade-long strength or not? But that's my 2 cents on the Dixie. And then you mentioned levels on the S&P, but you kind of stopped at the 4,100 or whatever, and I actually really like just the equal high up here at 4,300. I think that would be a really strong sign if you don't get resistance until that equal high. If you just have another relative, lower high, it just feels like this consolidation sideways really wants to continue. Whereas if it goes to 4,300, at least it's the equal high. May still be continued consolidation, not new all-time highs or anything, but it starts to really look good from like a pattern trader perspective, and potentially equal highs, higher lows, kind of this more bullish consolidation rather than neutral consolidation potential would kind of come in play for what happens over the course of the year. So I would really like to see that 4,100 level really be kind of disrespected and pumped straight through, and get, kind of 2 weeks, just pound straight through it and say, screw this, valuations are cheap or whatever, and we believe in higher, and see 4,300 tested pretty assertively. I don't have any conviction above that level. But
no, for me it's the same actually. When I'm looking at the S&P, right, I see basically this. I think this is gonna be basically where we're gonna spend a long time in this kind of box. I don't know if it's gonna be this long, but I think it's gonna be quite a long time. Between monthly support at 3.7 and monthly resistance at 4.3. Anything in between there can take quite a while. Like you could do something like this and then come back down. And I mean, that's kind of what's been happening. Even if you look on the low time frames, right? We've been just chopping. We chopped through this level, which was really, really important on the left side, right? We broke it to the upside, couldn't hold it because this trend line kind of stood in its way. Broke it to the downside, but that couldn't maintain. And now we're back, and back at the trend line. I think, to me anyway, this could look much, much worse. We basically closed above the trend line last week, but that's trend lines are kind of shitty in the regard that, if you have a close at the trend line, the next open is gonna be through the trend line, which makes it kind of seem like it's broken, and then you have to wait for an entire week to kind of see if it confirms or not. But this is something that the boomer's been looking at, right? I've seen it in multiple publications. But as we've talked about, like in previous weeks, this has been tested a shitload of times now.
Yeah.
And it would just kind of make sense to me, especially given we broke the horizontal, to also break this. And then I think we could go to 4.1 and preferably to monthly resistance at 4.3. So we're in this situation where we just need a little bit of, we don't even need the S&P support, right? We just needed to not dump. And it very much made it clear, I think, in the last week that it doesn't necessarily need or want to, because, I mean, we broke this resistance. We had an obvious bearish retest possibility. That didn't happen. We rallied right back into that trend line. And you can kind of see the reaction, right? Like we hit the trend line. This was the reaction that we got. Then we hit it again, got this reaction, and now we hit it, and you see this, and you immediately reclaim a resistance. That's very, very different, right? And that's also, if we're gonna kind of go upwards, that's also gonna be a higher low. So all in all, like, this doesn't look too bad to me. And that, coupled with the fact that Bitcoin actually just looks insanely good on pretty much all time frames besides the monthly, and that can easily trade above resistance and close there. I have some high hopes for this and next month. I wouldn't say, like, for the S&P all-time high is incoming, and I wouldn't say for Bitcoin all-time high is coming, because I think even if we're gonna see like upwards momentum continue, I don't think we're necessarily gonna trade anywhere close to 60K anytime soon. If anything, I could see it like go sideways between like 20 and 35K for quite a while. So this is kind of, if we close the monthly above resistance and the S&P kind of continues to at least not be shit, I think this is probably going to be the range that we're going to be dealing with. And then this could still be the bottom, as in like the macro bottom, but you don't, like, that doesn't really matter too much, right? If you're trading at 19K again, because that's just a tiny increase and people are going to lose their shit. So that's kind of like what I think is most realistic given how the S&P looks. But yeah, we'll see. But it doesn't look bad.
I find all of this to be pretty supportive of the stagflationary environment as well, where people would rather own some of these strong asset classes. So I haven't had anything to prove me wrong on that quite yet, so I'm gonna hold on to it. The other things of note, the VIX below the 20 was a surprise for legacy traders and just didn't have much of a bounce. So if it has kind of this stuck in hell sub 20, sub 25 VIX range, that can be positive for continuation. Also, rates across most tenures for US yield made lower highs, and looks like it kind of wants to turn over on most of these time frames, at least in my opinion. And so you could see a stabilization on some rate driven stuff. And then also gold has moved really strongly, in addition to most of us are watching Bitcoin, but gold went from 1620 to 1920 in just a couple months, which is pretty impressive for gold. And on a long-term basis continues to set up this kind of ridiculous chart where it just, I don't know. I think sub 2K gold looks like it doesn't have a long time to live. I could really see gold making a push to like 2,500 this year. And especially because I feel like a lot of gold bugs have really given up on it as it's underperformed in an inflationary environment. So why not pump once they've capitulated out? One inflationary thing to watch is if oil continues to recover. It bounced off its lows. Looks like it's kind of consolidating. And if it has a push higher, that could start to have an impact on inflation. Even though they changed the way they calculate CPI. Did y'all see this? They're changing the formula. Inflation is not improved, so they're going to change the formula to make it look better. And they're just changing the way that they do the averages from 2 years to 1 year, and it may have a near immediate impact on what year-over-year inflation looks like. So it's worth keeping in mind whether the market can sniff that out or if we'll just like buy the narrative of, hey, we fixed inflation. Look, inflation is gone. It's like, but if you actually look at the formula from what it was, 3 months ago, then it's not gone. Something to watch. But there's been a bunch of people in the legacy world talking about that recently. All right. Down the line, altcoins, JPEGs. Oh, ETH BTC. Cred, can you lead us through ETH and ETH BTC?
Not in any useful capacity, but I can certainly try. I mean, as far as ETH goes, I was kind of expecting some sort of reaction lower, as in at the 1400 handle. And the reason for that was based on weekly market structure, where there was a fairly clear pattern of lower highs and lower lows. I've done this a million times: high, low, lower high, lower low, lower high, lower low. So if the market starts to rally, ordinarily you would look at like a 618 or 60 to 70% retrace to get a sense of where peril might lie should bearish market structure continue. And if you perform that exercise with the more recent swing high, the 1400 handle had a lot of confluence there around that price point. The 618 basically sits right on top of it. And also that's the former all-time high type of level around the 1400 handle. So I was expecting something there and nothing came, which is kind of telling in itself. I mean, purely technically at the moment, it's at the top of its weekly range, kind of similar to Bitcoin. I think just as the range midpoint on BTC is going to be very important, I think the range is marginally less clear for ETH, as in it can't be constructed as nicely. But I do think this watch potentially should have been weekly resistance. And it's also a big daily level, as your kind of eye test can tell you. I think that's going to be rather telling. So my sort of short to medium term line in the sand is this 1400, 1460 type of level for ETH, where I don't think if the market's going to look, if it's going to look decent, it has no business kind of going below there. So at least on a short to medium term trading basis, if it happens to puke into this area, I'm going to look for some sort of bounce. In the interim, I think it's kind of coin tossy territory. Because it's just trading at this consolidation. And to be completely honest with you, this entire structure, this 1500, 1600 area is really kind of messy for me. So the clear level is at 1400. The upside kind of target or potential area for a spike or some sort of trap is the 1600 range high. So this is important and interesting. This is important and interesting. This consolidation, and even if you look to the left, there's nothing that great going on there that would kind of demand my attention, especially given how clear Bitcoin is at its current levels. So that's kind of the ETH picture for me. And on the ETH BTC front, I mean, this thing's been consolidating for months and months and months and months. I don't want to read too much into it. From the levels that I've got, it's still finding some resistance at the range high, but not in any meaningful capacity at the moment. Perhaps if Don's argument for BTC dominance on another leg is correct, and that also applies to ETH, then perhaps the bottom of the range at 0.06, something like that. But I mean, if you just look at this chart, it's very hard to develop strong views like here. That's like 6 months of price action or something. I think reading it too closely is some form of undiagnosed mental illness. So I'd rather focus on the USD pairs. I think they're clearer at this point.
All of the moving averages also would indicate 1400 as a line in the sand, like 200 day, 200 week, 20 week, 20 day, everything would say if you get that pushed down to 1400, buy it, but hope it doesn't stay there very long. And yeah, I could imagine if you're trying to extrapolate that, if you have BTC take over, go to 24K, ETH go to 1400, if that gives you that ETH BTC micro dump, and then ETH BTC does the swing down and then moon type of move, that would make a lot of sense to me. But that's extrapolating like multiple layers. So
yeah, it's tricky.
I'm not sure it's valuable.
I mean, look, to be completely candid, unfortunately, large parts of my trading so-called career have essentially been this. So there's a really good level, right? Let's call this boy A+, because that's how good he is. Okay, this is your A+ level. And what the market will do is, I have an eye for it. And so the market does whatever, and then it has a breakout. Okay, and it's a strong one, which is good because you want to see strength through the level. And so the plan ends up being, I'm going to do business at the A+ level. What instead happens is the market consolidates, does this, and so instead of trading the post breakout consolidation, I do fuck all. The market breaks up and turbo doubles from the important level. And then whatever mega target it hits, by the time it gets to the A+ level, the rotation's over and it does that, you know? And so I've become very, very kind of conscious of that. And while it's true that if it does pull back and so on, the setup is kind of quote unquote technically better because the proximity to invalidation there, I'm actually trading at structure and not away from structure. Sometimes that's just not how it works. So nowadays, probably in the last, I don't know, 6 to 12 months, probably close to like 8 to 12 months. And whenever there's a break of a key level, I look at where it's ended up first. And then in the back of my mind, I keep the type of retest scenario, because there have been far too many moves where the move above the level is the trigger. But I just, I've been way too strict, and I have to trade at my level. And even though I have my target up here, there's nothing that takes me from the break, from the trigger to the target, because I was so dead set on trading the level itself. So nowadays, this is very interesting to me. And to extrapolate that analogy to, it's not even an analogy, it's a sad history. To extrapolate that to BTC, if it wants to come here, great. If it doesn't, I'm going to, as I've said, put a lot of focus on where it's ended up now, as opposed to where the range reclaim thesis technically formed. And I think it's something similar for ETH as well, given as we were discussing. This breakout 1400 is the big deal. And yes, if it does go down there, I think it's a well risk-defined area to do business. But I'm not going to take that assumption for granted. And I'm going to try not to limit myself to, well, if it comes back, I'll trade it. And if it doesn't, even if I have clear lower time frame setups or upside objectives, I'm going to ignore it. So that's kind of what I'm trying to, what I'm trying to avoid to some extent. So now, obviously, what's going to happen is it's going to retest perfectly, and whatever. you know how it goes.
You'll be stopped out. Don, you have some diagonal lines drawn on your chart.
Oh yeah,
it's not common for you.
We were in a downtrend, right? And this is something that I've had on my chart for quite a while now, because we kept on making lower highs, right? And I was looking at this resistance here and this diagonal, basically. And I knew that if we broke it, that we kind of just would gap upwards. And that's what we did. I just wasn't quite sure if we would do it. Like, I would have bought more ETH if I was very certain, because we kind of hugged this support level for an uncomfortable amount of time. But now that we've broken it, right, this is, to me anyway, this is too close. Like, this resistance up here on the left side is too close. Like, we're trading pretty much exactly at that high without having broken it. That it just makes sense to me to break the highs as well, even if you want to go down. And it's also interesting to me that we kind of closed last week above the all-time high. So this is the all-time high. We closed last week above it. We also broke the downtrend. We also broke the first resistance. So I'm in team. Okay, just trust the breakout until it fails. And I think this area here, if you get anything in here,
what is that dollar amount?
14.3 to like 1430 to 1550 or something. So something in here, basically. That seems like decent support. That's something I would like to see hold, to kind of it's the same area that Cred is looking at as well. But I'm pretty bullish on this. I don't really like, the only way to truly turn me bearish would be crashing through here, and then I would try to, like, because I have a little bit of ETH, I would try to sell the underside of this. But unless that happens, I'm just going to stay bullish on ETH. And I think the next real resistance is 2.5K, which is quite a bit away.
Don't get me excited, Don.
I think we haven't had the bear market rally, and we are overdue for one. And given we haven't had one in so long, I think it could be like oversized. I could see it be aggressively faded at 2.5, where it's basically, it hits 2.5 and then the next day it's back at 2, and then the day afterwards it's back at like 1.8 and starts looking really shit, and then just goes sideways. Like, I think that is a possibility. I'm just basically like for ETH, and honestly for Bitcoin too, I'm playing these level to level now. I stuck my neck out when we're like trading down here, because there wasn't really like the best setup. And now that we broke to the upside, I could just trade it level to level. So basically, this support holds. I'm gonna remain bullish, and I want to see what happens with these resistances. As in, like, this is my support level, this is my resistance level. If nothing happens at the resistance, I'm gonna take one higher, and that's kind of all I'm gonna do. And it's the same with ETH. Supports around like 1.4. And as long as we hold that, we're good. And then I'm going to trade it level to level. And I don't think there's really any meaningful level between where we are and 2.5K. So I'm just going to aim for 2.5.
Love to hear it. Cred, any closing words?
No, none.
All right.
I'm going to do the Don on this one. We've said enough.
We've said enough. Thanks, everybody, for joining us. We appreciate you being here. You can hit like and subscribe and all that stuff right here. If you can't catch the video, you can catch us on audio. Just search your favorite podcast apps for Weekly Open. We appreciate you joining us, sticking it through the bear market and hoping for the echo bubble. That's what I'm hearing here today. Thanks for joining us. We'll catch you later. Bye-bye.